Hey, we're going to talk about there's always the question with deductions and what can us agents and other independent contractors, 1099 employees deduct and what can we do to use those to our benefit. Today we have Gassan Gracie. He has his own boutique accounting firm and it's called GBC Services LLC. Gassan, thank you so much for being here today and appreciate it. And how long in the business now, and how long have you been doing the accounting side of everything?
Well, I come from a family of business men, primarily my grandfather, who started the family business, so to speak, and not just my immediate family, but the extended family, the Gracie family in Nigeria at the turn of the 20th century, thereabouts. But he died at age of 39, and my father was 16 years old when he took over my grandfather's business in Nigeria and became very successful at it and helped other family members from the extended Rezi family go to Nigeria. So I was born into that environment, and I've heard them speak of letters of credit before I knew what they were. And now that I need to use one, I find they're really more complicated than what I thought they were, and stuff like that. So I really started out in 1989. Was it? No, even before then, probably 1986. When I graduated high school, I went to Nigeria and I wanted to immigrate to the United States. And there was a 3-year waiting period through the process that I applied through. And in that 3 years, I was in Nigeria, and my father put me to use by working in his factory. And I found ways to learn how to work in the spare parts. So in that environment, I learned how to trade, how to lead employees, how to gain their trust, even though I was the owner's son. But at the end of the day, he was not treating me any better than he was treating them. But they all called him Baba, which means father. So in that sense, he was a father to everyone there. In a sense, one, he gave them work, and he was a kind man. He was generous. And I admire him for a lot of things, as much as I also might criticize him for things. So from there, I went into the Navy and I did payroll and finance because they thought that was my best skill. I really wanted to be a journalist, but there was security clearance that I had to go through. And then I thought, why waste that experience? So while in the Navy, I finished my associate's degree in accounting, then moved into a bachelor's program at the University of West Florida, completed that, and became a CPA back in 1996.
Well, let's jump right in. And we talked before we got started, and I think we'll just go right there. So, as
Right.
far as deductions, how us independent contractors set up their expenses, spending habits. The biggest thing you pointed out was you want to have a separate business account, and the money you're paid for your work goes into there, and then use that to purchase your items you need for your business, and then if you need to use some of that, you can pay yourself, right? If let's say I want to give myself $1,000 for my personal expenses, but you definitely want to keep it tight, run it very firm as far as the business expenses in the account and don't use it for anything personal, right?
Yes. And really, it starts with the basis of your business. So if we're talking about independent contractors, you have to think of yourself as a business. That's what makes you the contractor part of being an independent contractor. The other part of it is the independence, and there are tests for that. Now, why I go into that is independent contractors, some of them fall in as employees and should not be. So I have to be careful in qualifying that. And to start with, an independent contractor who falls and qualifies on both meaning of the term has to perceive himself as a business, and as such cannot intermingle his personal with himself as a business. So to effectuate that, to underline it, create a limited liability company if you're in Georgia, and call it Tom Sheeran LLC, as being that a real estate agent, you're the face of your company. So as not to impersonalize it, call it by your name, but you have to have that LLC at the end of it, because you have to be limited in that liability. And then open a bank account under that name as a business account, and then spend all the business expenditures out of that account, but all your personal, you reserve that for your personal account. You pay yourself, depending on the structure of that LLC, but you pay yourself, and out of what you pay yourself, you pay your personal expenses.
Yeah, and I had set myself up a few years back. It's real easy to do online. Yeah, I use Sheeran Services LLC. That's my company. But yeah, in the biggest thing too, it provides that layer of protection, right? Of
Definitely.
your business versus personal and assets. And
I benefited from having structures in place back when I first started, and I bought this building and also bought the problems that were with it. And it was really an HOA consisting of 5 owners, 6 lots, and there was abuse. And because of the separation that I had, I was able to protect not just myself, but I was able to protect my business from the liability that was imposed on that property. And at the end of the day, anything you solve with money is cheap. And if you get out with your integrity, then that's all I care about.
excellent. And of course, the biggest thing that comes to mind is your mileage you can use for your vehicle, but let's talk about the vehicle itself. And there's apps now that'll track all your mileage, which
Right.
you really want to be pretty consistent with that, correct?
Correct.
And so let's start with the vehicle. And I know there used to be qualifications for the size of the vehicle, the weight, all that sort of thing. Tell us a little bit more about that.
Yes, it's the vehicle category is, well, really in the vehicle, because it's a dual use asset, you have to first qualify the usage percentage of whether it's going to be 100% business or anything less than that. And there are ways to determine that. So why I begin with that? Because that really can be a basis for purchasing a vehicle as a business tool and then depreciating it in the most favorable ways. Now, there is a limitation, which is what you were probably thinking of, in how much you can depreciate, how fast, which is based solely on the weight of the vehicle.
Mm-hmm.
So even though a business vehicle, you can depreciate 100%, but how fast you can depreciate it is really dependent on the weight. Now, 100%, I have to qualify as long as you're using it 100% for business. Now, in the real estate agent world, I'm not sure today how much it is as it was, let's say, when I first started looking for a house in the 1989 period or 1990 period, early 90s, driving with the agent, taking us from house to house. Now, when my wife and I bought this house, we did that too with with the agent that we had, but we also had a lot of legwork, so to speak, online where we search things, but we had to go
Mm-hmm.
out and see them to see for
Yes.
ourselves. In that situation, you would need a bigger car to accommodate more people. So therefore, I believe the weight is 6,500 pounds or more off the top of my head. I can double check it for you.
Yeah, and we can look that up and provide
Yes.
it too. But yeah, that's a great example of the modern day real estate agent. I guess is a lot of times, yeah, people are doing a lot of research besides what we send them.
Right.
You know, they're looking on all the online platforms, and you know, and most of the time they'll meet you.
So really the need then uh, will determine the type of car that you're gonna use or that is most favorable for the environment you're in. And there's a case for having an electric car because it's most efficient, you know, in the long term, for example. And there used to be credits for that. But even if you don't get the most favorable um, credits, you can still qualify to get the fastest depreciation if it's over 6,500 in weight. By weight, you can depreciate as a Section 179 deduction, which you would include as other assets that you bought during the year, and you can expense 100% in the year of purchase rather than extended over the life of the asset, which is how you're supposed to expense an asset. But a vehicle is very tricky. You have to have documentation, and the best way to keep that is to have electronic capability to keep up with the mileage and determine, you know, when you're driving the vehicle for business, that is, if you're using a vehicle for both business and for personal, and in that situation, you might not want to depreciate it. You might want
Hmm.
to utilize the mileage, which would be more beneficial to you if you're not using the vehicle completely for business. And thereby, you would definitely need to have a good bookkeeping of what the mileage were, when, and all that. And you could do that by having an app in your phone or in the car. You could have a GPS device, I believe, that you can connect to print out the log that you need electronically or on paper as support, which is all you need in order to take the expense as a deduction.
And then again, it makes me think too that if it's going to be primarily work, maybe a 70-30, 70 being the work use or business
Mhm.
use, you want to make the purchase in the LLC name too? Is that
Well,
important
that's a
or?
very good question. And I was thinking for my purposes, because I have a business vehicle myself.
Excellent. And yeah, so that's good tips, and we'll get some more information on the weight and everything, and I'll include some more information on that section 179 deduction too. And
For some reason, 6,500 pounds is on my mind, but it could be 7,500. So we're not talking about a big difference.
and what else comes to mind to most people too, I think, is deductions for your home office. A lot of us have them now, and I'm in a setup in my basement. And with home office, do we have to have the exact square footage, or is it just the space you're working in? Like I've got a finished part of my basement. I use probably half of it for my office. So is that the amount you can deduct, or how's all that work?
Well, you have to justify the need, a business need, for whatever size that you have. And it could be that, well, it's an open space and there's no way for me to differentiate or demarcate, but I prefer that open space, and that could be justification enough. But there is a condition. In that space, there'll be nothing personal. It will all be business. So what you define as business could be anything except a bed. I mean, a bed is not business. I don't know where a bed could be anything but a hotel as a business. So let's leave a bed out of it. However, I have a small table right there with decorations on it. That's what I have at my office too. You know, I have desks, I have tables, I have decorations, I have a plant in my office here. I have a plant in my home office as well as in my commercial space. The distinction is you cannot have anything that would be personal. And a bed, for example, is the clearest image of what is personal. A day bed is borderline, but I think that would be personal. I have a love seat in my commercial space. I don't think that's personal. That's a place where someone can sit, even though I can lie down on it and sleep on it as a bed, as I
Yes.
have done at night. But it's not a bed. It's still a love seat. You know, you could use this chair to sleep on. So I'm making these distinctions because just like separating your bank account, where you're separating your personal from your business, you have to do the same if you want to have a home office. And it's not just for IRS purposes, but also for liability reasons, insurance purposes. These are very important to protecting your personal wealth and your business, and as well as your reputation, and as it relates to these issues.
And I know too, if some people use their office and they actually meet people in their home office. So there's criteria too that you've got to have a separate entrance. Is that still in play, or does that matter?
No, no, I mean, there's no way for you to have a separate entrance in your home.
Well, like in my basement, I'm to my left is there's a door to the outside that,
I mean, if you have one, great, but that's not a
yeah,
requirement.
okay.
You know, if you specify, you know, that this basement, which has a door to the outside, is a business, a home business, then yeah, that would be so. But I have a home office here, and I have one upstairs. If you walk in either one, you will see it is very plain. They both have a desk. If I have a guest and I have a chair for them to sit in, that's perfectly all right, you know. But I'm not going to include the entranceway in my calculation of home office deduction. That would be the difference.
Yeah.
So it's not a requirement. The requirement is that it's an identifiable area that does not include, and it could be, I mean, to the extreme of it, someone living in an apartment could specify an area in the living room that is distinct. And it could be just what, uh, I don't know how many feet, but let's say 5 by 5 or whatever, 25 feet, square feet. Very small area, but in that small area, nothing that should be considered personal. You know, you would even be more strict in such a small area than in a larger area where you could have decorations, for example.
The biggest thing I talked to you earlier about was a computer, and if you do need it for business, is it like your car where it's not all 100% use, but how's that figured out for a deduction?
Well, well, depending on the equipment. Now, dual use, or what they would call listed property in tax terms, would be items like a computer. And it's hard to police that, especially I have this tablet that I carry everywhere. It's my office away from office. That's why I'm
Hmm.
able to work at home, because I can replicate my virtual office here and be able to work all the tools. And part of the tools that I need here that I can also use, that I also use at the office, is a printer. Um, I use that for business. That's the primary reason I have it. I would not have the same printer, let's say, if I wanted something for my personal use. However, when it comes to items like that, the fringe benefit is not worthwhile. It's not material enough for you to sit down and calculate how much paper I use, to print out something that is not 100% business. Could
Hmm.
be, peripherally related. It could be a home insurance policy, where your business office is located, or it could be anything, but you cannot sit down and police that. So there's some fringe benefit factor that can never be policed, and that can never be subject to that minutia of detail. So
Hmm.
depending also on the cost of the item. I mean, right now, the average cost of a good computer might be between 500 and 1,500, right? If you want to go
Yes.
all out, 1,500. If you want to go above that, so maybe that's where you get into the luxury area. Why would you need a more graphically enhanced, monitor, for example, that could be used for gaming, let's say, or more suitable for gaming than it is for your business, right? Unless you have a business need for it, if it's clearly something that looks like a personal item, then don't try to push it.
Well, good. So to get a hold of Gassan, his phone number, I'll put everything at the end of the video, but it's 678-366-9232. Certified public accountant, tax expert, and his motto is helping maintain your sanity, right? Yeah, so
Otherwise,
so
you'd be taxed on.
so wrapping it up, the biggest thing, create an LLC, and it made me think, okay, you have to file every year, renew and this is the time of year to do that. So if you have one already, renew it online. It's real easy. It's real easy to set it up. Get your business account and don't commingle funds. Use the business for business. And they used to tell us a long time ago to run your business like a business, right? And
Yes,
and
yes,
and
yeah. I mean,
keep
it
things
sounds
separate.
old-fashioned, but it really is very sound advice. Yes.
Well, good. And then anything else you can think of deduction wise that maybe we didn't talk about or
Well, there is a golden rule, I think, that you can follow. Anything you use for business that you purchased or paid for in the current year is a legitimate business expense. So no guesswork about that. Anything you need for business is a business expense. And, you know,
And be honest about it and run them separate, and you'll be in great shape with the IRS. So,
for what he did.
all right. Well, appreciate everything. Thank you so much. He's Gassan Grazy with GBC Services. We'll have his contact info at the end. Thank you so much. So there's some great input on what us independent contractors can do for deductions and how to handle everything. Thank you so much, Gassan, and we'll talk soon.
Thank you, Tom. Thank you.